Budgeting can be a daunting task, but it's an essential step towards achieving financial stability. Whether you're just starting out or looking to improve your current budgeting skills, this guide will help you plan and maintain a monthly budget that works for you. So let's dive in and learn how to take control of your finances. Calculate your net income. To calculate your net income, start by listing all sources of regular income you receive each month. This may include salaries or wages from your job, rental property income, or freelance payments. If you have irregular sources of income such as commissions or tips, estimate an average monthly amount based on past earnings. Track your monthly spending. To start tracking, gather all your bills, receipts, and bank statements from the previous month. Next, categorize your expenses into fixed and variable categories. Fixed expenses are those that remain the same each month, like rent or mortgage payments, while variable expenses change every month, like groceries or entertainment costs. Use a spreadsheet or budgeting app to record all your expenses under their respective categories. Set realistic monthly goals. Once you have identified your priorities, set specific and measurable goals that are achievable within the month. For instance, if paying off debt is your priority, set a goal to pay an additional $200 towards your credit card balance by the end of the month. Remember that setbacks can happen along the way. Don't get discouraged. Instead, use them as learning opportunities so you can adjust accordingly for next month's budget. Examples of a fixed expense? Examples of fixed expenses include rent or mortgage, payments, car payments, insurance premiums, phone bills, internet bills, and cable TV subscriptions. Examples of variable expenses? Examples of variable expenses include entertainment, such as movie tickets or concert tickets, travel expenses like gas or airfare, and shopping for clothes or personal items. Automate your savings. One way is through direct deposit, where a portion of your paycheck goes directly into your savings account each month. Another way is through automatic transfers between accounts. You can set up recurring transfers from your checking account to your savings account on a weekly or monthly basis. Figure out your after-tax income. To start, calculate your gross income for the month. This includes all sources of income, such as your salary, tips, and freelance work. Next, subtract any pre-tax deductions, such as health insurance or retirement contributions. The remaining amount is your taxable income. Track your progress. Start by tracking all your transactions each day, whether it's through mobile app or manually in a notebook. If you notice that you're overspending in one category, such as eating out, adjust accordingly by reducing the expense and reallocating those funds towards another area of focus. And last, make a new budget before the month begins. Don't forget to make a new budget before the month begins. This will help you stay on track and avoid any surprises or setbacks in achieving your financial objectives.